Okay, so today we're going to be doing some top to bottom analysis on GBPJPY, that's British Pound Japanese Yen. So, as we usually do, I'll start by identifying my zones from the monthly time frame. So here we have our, you can see that price bounce above this level first time, second time, third time. So this is a valid level. It's a bit of a level around here. It's not very clear. We have a zone right about here. We'll press and move it a bit. It's not very clear. We have a zone here. You can see the price bounced off it the first time, bounced off it the second time, and then came back to retest it twice. That makes this zone a valid zone. Okay, let's go down to the weekly time frame. Before we go down to the weekly time frame, actually, the trend line can be drawn across these points. This is a valid trend line. So this will be our monthly trend line. We have a zone here. Starting from here, you can see that price has bounced above this level twice. So that makes it a valid zone. Let's not go too far back into the past. There's also a zone here, because you can see that price has drifted above this level multiple times before getting to this difficulty. And finally, we have our previous all-time high. We should be able to draw a trend line across this point like this. So let's go down to the daily time frame so it will be more clear. So we have a daily trend line. We have a daily trend line that can be drawn across these 2 points. But let's use 2 more recent points. Let's use these 2 more recent points to draw our trend line. So now we have our daily trend line. And then we can actually keep this trend line as well, because this trend line is actually still valid. We can choose to delete it and we can choose to keep it. But let's just choose to keep it, since this trend line is still valid. So this will be our second daily trend line. Then the next thing we do is we identify our trend origin. We identify our trend origin as well as our market structure. So this is going to be our trend origin. And then basically structure goes like this: impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive. Price goes down but doesn't break below this level. So we have a correction to here. Impulsive. Price doesn't break above this level. We have correctional to here. Impulsive here. Correctional here. And we have an impulsive, correctional, impulsive, correctional, impulsive. So just for the raw fact that price is currently in an impulsive move, I'm not really eager to look for a trade on this pair right now. Just for the sole fact that price is currently in the middle of an impulsive move. Typically, we like to wait for price to be in a correctional move so that we can catch the entire impulsive move as it starts. This is our daily market structure. Let's mark it up all the way. And delete this. Go down to the 4 hour time frame. And as usual, okay. This price seems to have entered a rectangular range here for here. You can see that price bounced here to here to here, here, down here, up here before breaking out. Now that price has broken through the top of a rectangular range. Okay, so there's actually an opportunity to take a trade here because typically when price breaks out of here, typically when price forms a rectangular range, we expect a breakout in the direction of the original trend. The original trend is upward, so we'll be expecting that now that price has broken out, that price will continue to move upward. So should be able to set up a trade like this, something like this. But since price has broken up below all time high, we don't really know how well we can take it to, so we'll have to line it up with a psychological level, something like this. Could probably also go down to the 1 hour time frame to reduce our risk. So let's go down to the 1 hour time frame and see if we can reduce our risk. Okay, slight network issue there. So typically, what we'll do usually we'll go down and see if price prints any common patterns that we can look for. For example, here we can see this is a inverse head and shoulders, and we usually go down and look for any pattern that we can find the period before price switch from a correctional move to an impulsive move. But let's just focus on the impulsive move that's still active. So let's go down to the 1 hour time frame. On the 1 hour time frame, we can see impulsive, correctional, impulsive, correctional, impulsive. So that means that we can reduce our risk to just about this level. Even let's just put the big one. Yeah. Price will continue to be in an option as so far it keeps breaking highs and not lows. So we can enter this trade here and move our entry here with our risk here. And then this will be our trade. The only problem is that price has passed the previous all-time high. So exactly how far we should be expecting price to move, it's a bit difficult to measure. So you just have to keep your eyes open and make your decision about that in real time. It's actually a bit of a zone here. So there's a fair chance that price will either, since we have not yet actually entered this trade, the best thing for us to do would actually be to wait for price to break through and retest and enter. Or we can aggressively enter right away. Either way is fine. So that's it for GBPJPY.